Okay, so let's get in touch with our emotions and talk about the point of maximum opportunity. Hi, I'm Matthew Carr, Chief Trends Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. Investor emotions ride, this rising and falling tide of green and red. If you're long and the markets are up, hey, you're having a great day. If you're long and the markets are tanking, you're probably not in a very good mood, thinking about drinking, maybe even doing We have to keep in mind, though, not to get whipped into a frenzy of, either panic selling or disastrous. Fear of missing out, FOMO buying as the markets whipsaw, right? Investing is a marathon. It's not a sprint. So there's no need to race out and deploy all your cash, right? This is a time when the markets are like this to choose our spots carefully.
It's time to stop. It's time to stop, okay? No more.
There are dozens of potent quotables from the world's wealthiest men and most savvy investors that we can turn to for guidance to navigate, kind of the choppy seas that we've seen in 2022. Buy when there's blood in the streets. Be fearful when others are greedy, and greedy when others are fearful. The end is not nigh. People and markets adapt to even the worst circumstances, right? These are a lot of my own personal mantras. There's always this saying that bear markets descend on a slope of hope. As the first signs of trouble appear, euphoria gives way to anxiety and eventually denial. No one believes that this, profitable run is about to come to an end.
This is fine. I'm okay with the events that are unfolding currently.
Then desperation and panic reveal their ugly heads, and the mounting losses evolve into capitulation, where every asset is being sold hand over fist, regardless of its exposure to whatever the current crisis is. After all hope is bled from the market, when fear is the strongest current, this is where the greatest investment opportunities are born. At the point of maximum pessimism, there's only one direction left to go: up. That's why I believe the point of maximum pessimism is the point of maximum opportunity, right? So we saw this point of maximum opportunity hit recently in Chinese tech stocks. For much of the past year, there's been this ongoing divorce between the US and Chinese markets. Most notably, Chinese companies have been accused of some questionable to downright, fraudulent accounting practices. The poster child for this is, Luckin Coffee, which was found guilty of materially overstating its revenue by, $300 million between at least April 2019 and to January 2020. To kind of combat this, we had the Holding Foreign Companies Accountable Act introduced and eventually passed in Congress. This was in part a direct response to Luckin Coffee. When this bill was signed into law in December 2020, this kind of triggered broader fears of scrutiny of US listed Chinese companies. Unfortunately, at the same time, China began its own regulatory crackdown.
There's just so much going on here.
A lot of that centered around the ride-hailing service DiDi Global, but it did spread to tech giants Alibaba, JD.com, Pinduoduo, even Tencent. Right, all of these suffered big, massive hits. For investors, this created a lot of uncertainty, negativity, well as intense volatility. Throw in, the current situation that we have, and the Hang Seng Index was pushed all the way down into bear market territory, with the Chinese tech index gauge, down more than 60%, with many of these companies trading at new 52-week lows. Right. But in these moments of extremes, that's often when you need like a lone positive catalyst to trigger a rally and turn everything around. And that's what we got when the Chinese government announced it would ensure market stability.
Oh, thank God.
In just over a week, many of these shares, and these are large, multi-billion-dollar companies, soared more than 50%. But here's the deal. They're still considerably below their 52-week highs. So that's important to remember when we have, in emotional times like this, to be aware of the investor emotion sort of scale and making track of where we are, because sell-offs, be they broader market, sector specific, or both, these are periods of opportunity, not panic. This is when we can buy shares for cheap. That's the point of maximum opportunity. When everyone is screaming the world is ending, you can rest assured it most certainly is not. Well, I'm Matthew Carr, Chief Trends Strategist for the Oxford Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.